Welcome to Talk Tickers, where we break down the latest earnings calls. Today, we're digging into Cipla's Q1 results for fiscal year 26. And let me tell you, this is more than just another earnings report. It really shows a company right in the middle of a major strategic pivot. And wow, did the market notice? Right after the numbers came out, the stock shot up about 6% in just 2 trading sessions. Now, that's not just a little bump. That's the market giving a big thumbs up, showing some serious confidence in the story Cipla is telling. So what's got everyone so optimistic?
Well, management set a really confident tone. The global MD and CEO, Umang Vohra, he basically framed the quarter as proof that their strategy is working. They're dealing with some big shifts in the market, and the message is clear. We've got this.
Okay, let's get into it. Let's look at the actual numbers that got investors so fired up. So their top line, their total revenue, came in at nearly 7,000 crore. That's up 4% from last year. A solid, steady start to their fiscal year.
But here's where things get really interesting. Their EBITDA margin, a very strong 25.6%. Now, despite all the challenges out there, their profitability is staying rock solid, holding steady year over year, and, this is key, it actually beat their own internal targets. That shows you just how tight a ship they're running. And that discipline, it flowed right down to the bottom line. Their profit after tax jumped a very healthy 10.2% compared to this time last year. This is exactly the kind of high-quality earnings growth the market loves to see. And check this out, because this chart really tells a story. For the first time ever, their One India business, that's their domestic arm, it crossed the 3,000 crore mark in a single quarter. It now makes up a massive 44% of their entire global revenue. That's a powerhouse. So, how are they pulling this off? The numbers are good, sure, but the real story here, the story behind the numbers, is this incredible balancing act between managing old challenges and jumping on new, really high-value opportunities. So on one side, you've got this major headwind, big-time price erosion in the US on a key drug, generic Revlimid. But on the other side, they're launching these complex new products like Nano-Paclitaxel. This is that pivot we're talking about. Right here in action, they're trading out old revenue streams for new, more profitable ones. Now this is really smart. They're de-risking their whole operation. Take a look at their US supply chain. It's almost perfectly balanced. A third comes from US facilities, a third from India, and a third from partners. In today's world, with all the geopolitical uncertainty, that kind of resilience is absolutely critical. All right, now for the exciting part, the future. Let's talk about their pipeline, because this is where the long-term growth story really comes together, and it's why that stock popped. The roadmap they've laid out is super clear, and it is just packed with these huge catalysts. Next quarter, they're launching their first US biosimilar, a massive step into a high-margin space. Then later this fiscal year, we're expecting the generic version of Advair. And all of this is building towards a really ambitious goal, hitting about $1 billion in US sales by fiscal 27. And then you have the big one, their strategic entry into the GLP-1 market, for diabetes and weight loss. That could be a total game changer for the next decade. So, let's pull all of this together. What's our take? Where is Cipla headed from here? Let's boil this all down into our forward-looking rating. But before we give our rating, you know how we do it. We have to look at both sides of the coin. Every investment has potential upside and very real risks. So let's weigh the bull case versus the bear case. So the bull case, it's pretty compelling, right? You've got this high-value pipeline that's delivering, fantastic margin discipline, and this massive opportunity with biosimilars and GLP-1s. But the bear case has some real teeth. How much is that Revlimid price erosion really going to hurt? Can the India business pick up steam again? And of course, you've always got that background noise of geopolitical and regulatory risks. After weighing everything, our call is an outperform rating. We believe those powerful catalysts in the pipeline, combined with their proven ability to execute, are going to more than make up for the pricing pressure on their older drugs. That strategic pivot isn't just a slide in a presentation. It's happening, and it's delivering. And as always, just a quick reminder, this explainer is for informational purposes only. It is definitely not financial advice. Please be sure to do your own research before making any investment decisions.